Blueshift, which is Blueshift documents page, which should tell you what it is all about, right? So Blueshift is another product that we have at QuantInsti, which is a platform where you can both research as well as trade investment strategies. And this is where you use Python to do any kind of strategies that you want to work on. So you use it both to try stuff out, and in case your experiments turn out to be interesting and they seem to show some promise, you can take it live into the markets, right? So what I have done here is I have, for the sake of this lecture, I was playing around with some stuff. I want to show you guys what we've done here, right? So here what we have done is we are taking a Bollinger Band strategy from where we want to work with the New York Stock Exchange data, where this is a long short strategy based on Bollinger Bands and SMA dual signals. So that is what this strategy essentially does. Whatever I now talk about is less about the strategy and more about all of the analytics that we get once we run it. And I want to talk to you guys about how, platforms such as Blueshift help you get a much more well-rounded picture of what your backtest results look like. It gives you a slightly more realistic picture than, say, what we do on our own workstations. And it also helps you take things live into the markets, right, based on the brokers and those kind of things. So let me first give you guys a little idea of what's happening here. So like the way we imported stuff, you'll notice that even here there are a bunch of imports that first happen. Show you what's happening. So you import some technical indicators like Bollinger Bands and EMA, which is exponential moving average. You import something called commission and slippage, which we try to account for. And then there are some Blueshift specific API calls like symbol, order target percent, set commission, and so on. Now, the first thing we want to do is we want to select a universe. We want to select a universe of securities that we want to consider when we launch our strategy, right? So in this case, I picked some really large firms from the US stock exchanges, both NASDAQ as well as NYSE. So we've got Adobe, which is a software firm. There's General Electric, Microsoft, NVIDIA. This is Meta, which is Facebook. This is Tesla. This is Visa, and this is another, I forget the name. It's I think a microchip manufacturing firm. So this becomes like our universe. What we are doing here is we want to work with 1 minute data, by the way. And we've set some thresholds, some SMA period short, long, Bollinger Band period, and so on, right? Like I said, this part of what I'm covering with you guys is not so much about the strategy. It's more about what emerges when we run the strategy and run a bunch of back tests or decide to do some paper trading with the strategy. That is what I want to talk about, right? So if you go through all of this stuff, it defines certain strategy parameters. It defines certain variables to track signals and target portfolio. For the sake of this part, we've essentially set trading costs and slippage to be 0. You can obviously add some costs here based on how things work with your exchange, whichever part of the world you are in. And then there are certain other functions like handle data, run strategy, and so on. Now, I know this program might look a little daunting, but the good news is that with regard to Blueshift, we have this GitHub page which has got a lot of sample strategies, and you can take a sample strategy, paste it in the core editor here, and make very minor modifications to try stuff out, right? So you don't have to start with a blank, canvas. You have, like, I would say, quite a bit of starter code which you can use in order to take it as a base and then make changes to it when you're working with something, right? So anyway, so with respect to this, so if I were to say that, okay, I want to run it on US equities, so we'll be essentially working with US equities minute level data, and say, since it's minute level data, I want to work with say about 3 to 4 months. So let's start on 1st of June till you can say 27 September, and let's presume that I'm working with a capital of 10,000. So I say run. So one of the things that this particular strategy does is it's an equal, so it's trying to allocate the same amount of capital to each of my securities, right? So I have 1, 2, 3, 4, 5, 6, 7, 8. And since I have 8 securities, I would not want to invest more than 1/8 of $10,000 on any of them, right? So this is like an equally weighted approach to creating a portfolio. Obviously, one can choose many different approaches. We can size, we can do some position sizing based on how our stocks are performing, and that's again something which is slightly outside the scope of what we want to talk about for today. Interestingly, here what we are doing is while we run this back testing, it's giving you, it's telling you what the results are telling you, right? In terms of what would have happened if I had followed through on these rules, say from June to September. So that's like 3 or 4 months, right? So it's giving you an idea of how the benchmark performed and how your portfolio is performing. So let this run. And while this runs, I'm going to click on go live. We'll come back to the screen in a bit, but I'm clicking on go live for now, which will show you what happens if I want to take this live, right? So I run my back test. Let's say I like how things look. What I then do is I click on go live. So it says you want to make it compatible for a live run on Blueshift. So it gives you some things that that things are happening. So let's just click on accept and execute. At this stage, it says go to settings. Settings gives you some ideas on risk management. So it tells you that do you want to set certain limits on how low your capital can go. So if it goes, let's say below 50% your capital, you want to terminate the strategy, the algorithm. It tells you how many maximum number of orders that you can send. It tells you the size and so on, right? So I'm just going to stick to the default values and say save and close. So right now, essentially what I'm trying to do is I'm trying to do paper trading. That is, I don't want to put actual money, but I want to, based on how promising or how my backtest results look, I now want to paper trade. That is to say, I don't deploy real money, but I decide to take positions and see what would have happened if those positions had been realized, right? I could observe it for a few days, a few weeks, as per my wish. So I'll say continue. Here I'm going to select broker. So I have a paper trading account with Alpaca. It's one of the US brokers. So I'll say select broker. I'll say that I want to run it between say today and tomorrow. I could specify a capital of say 25,000. Continue. It gives me an option of auto confirmation. So I say auto execution, or it says one click, where at the very end, the user needs to click on whether you want to go live or not. So I'm going to go for auto, accept terms and conditions. So I will just go and say I accept. Then says review all information. So I say review. So this is my strategy. I have an account with Alpaca. Auto execution, capital, risk settings, all of this looks okay. Just selected default. I confirm. And this is how it begins, right? So it gives me some details on what's happening. It says creating necessary resources for the algo execution. So this is like the console, which gives you an idea of what's going on. So I could take a look at trades to see if any positions have been taken. I can go back to the dashboard. I can go to the code. So any of these things I could do at any stage, right? I can also stop my algorithm at any stage I want, right? Now, since I have been doing this before, I was also running some other stuff before this lecture, we can even go and take a look at other things that I've been running before this lecture. So that should give us a little more idea. So let me look at something I started yesterday. So even this is running. If I were to go and click on trades, it tells me that on 27th of September at 11, there was a buy order for Adobe, but this order didn't get filled, right? This Adobe order got filled, so I placed an order for placed a request for to buy 4, but only 1 got filled. Here I wanted to buy 4, and all 4 got filled, so it says complete and so on, right? So this is for Adobe, this is for Shop, so different stocks, and it gives me a picture on what happened in the previous day, right? So in general, it gives you, so what I'm showing you is we started off with back testing, and then we are now doing paper trading to observe for how many ever days we want, right? So, okay, so let's go back to what we see here. So it tells me that if I were to have run this strategy from 1st of June till 27th of September, I would have got returns of 5.43%. So this gives me like a quick description of all the things that could have happened. If I want like a detailed description, I need to go and click on new backtest and get all those details. Since I've already run it in the past, I'm going to show you guys directly what happens when you run something like the new backtest, right? I mean, detailed backtest. So previous to this, when I'd run it from 1st of May till 26th of September, and it tells me what the performance metrics of my strategy are. So it gives me annual returns, cumulative returns, and all of this stuff, right? In terms of how it has done, it gives me things like Sharpe ratio, which is like risk-adjusted returns. It gives me details on drawdown. There's also a tear sheet where you can look at different things like even a histogram of returns, the heat map of returns, and what positions we took on each of those stocks, right? You have some details on per trade metrics. So you have what happened on the short trades, what happened on the long trades, and so on, right? You have actual transactions that took place. So you have things like, okay, 6 quantity of Adobe was bought on, say, 1st of May. This is a back test, right? Remember, this is a back test. On 1st of May at 9:35, we bought 6 stocks for at a price of say 374. And then GE, we bought like 23 at a price of 100 and so on, right? It gives you all these details. It gives you also ideas of round trips. So round trip is both a buy and a sell for a given stock. So for instance, here you bought at 374.9 and you sold at 374.17. So your loss was minus 4.44 and so on, right? So it gives you all these details. What basically Blueshift does.